If you want to make more money on your bottom line, you have got to start getting more accurate and reliable feedback about the results you're producing in your business. And one of the places where I see all the time that contractors end up having poor information and poor feedback in their business is in their profit and loss statement and how they're accounting for different expenses. And in this video, I'm going to walk you through some key distinctions about what belongs where on your profit and loss statement and how to actually get more reliable, accurate feedback so that you can have a greater sense of clarity about the reality and the truth about your numbers, so that you have more confidence, so that you can make better decisions and take more powerful actions about how to increase your bottom line and be more successful in growing your contracting business. Hi, I'm Vicki Suter, and for over 25 years, I've been helping contractors increase their profitability, find more time in their day, and reclaim the joy and the fun in what they do again. And in today's video, I want to walk you through one of those key elements, which is how do you make more money on your bottom line? And if you've been watching me at all, or you watched any of my other videos, you probably know there's this theme that runs through everything that I teach and everything that I do, which is the more we have clarity about what's happening in our business, the more confidence we have, the more better decisions we get to make, the more powerful decisions we get to make. And that's the way, and is the greatest path. And over these 25 years, and honestly, in way more years than that, in my professional career, the thing that I have seen is that the ability to be able to have more control over the results we create is directly related to the kind of feedback we have that tells us where are we on the path compared to where we want to be. And the earlier on in the cycle we can see that, the better off it is. Your profit and loss is one of the key places where you're going to be able to use that piece of feedback to let you know if you're on track or off track to meeting your goals. And as a contractor, like, we have goals in our business. Everybody has a revenue goal, right? That tends to be sort of the easiest and the number one place that just about any business owner that you talk to has a revenue goal. But the thing for contractors is that you need to have a gross profit margin goal. As a contractor, you live and die by gross profit margin. So that's a second key number that is on your profit and loss statement that gives you feedback about, hey, how am I doing to reach that gross profit margin goal? And then third is net profit margin. What's your rate of return that you're making on your bottom line? I'm going to talk about each of those key numbers here in today's video, and I'm going to show you some things that I encourage you to go take a look at on your profit and loss to see, are you actually getting good information to let you know if you're on track or off track to meeting your goals and to making a decent profit? Because when your information is reported in the correct ways, then you're going to have correct and accurate feedback. And then you can make better decisions. But it's the second that you have to start second guessing your feedback, or wondering, or if it changes dramatically month in and month out, that you then don't trust your numbers. And as soon as you don't trust your numbers, you won't use them as a tool to manage your business by. And when we don't have good feedback and we don't have that ability to be able to confidently look at the numbers to tell us where we're at, then what ends up happening is you end up having all of this angst and anxiety of trying to chase after it in hopes that it's going to work out, in kind of running blind a little bit, right? It's like, imagine if you went to build a project and you had no schematic, no blueprint, no scope of work identified. You just went in and every day the customer told you what they wanted, and you anxiously are trying to get to what they want, but you're not exactly clear what it is. And you don't have any plan for getting there, and you don't have any feedback to let you know if you're on course. So the same thing is true for your business, right? You want to have goals, you want to have a blueprint, a strategy, you want to have a blueprint or a schematic that says, here's where I want to go, here's a criteria for success. Then you want to have a strategy that's going to help you get there. But along the way, just like with projects, you have to get feedback to let you know, how am I doing compared to how I wanted to be doing? What's the gap between those two? So I'm going to share my screen and we're going to walk through a profit and loss statement. I'm going to show you those couple of numbers where I see people oftentimes get that feedback in the wrong place and then you don't have good information. So this is a profit and loss statement for a contracting company. It's for a 12-month period of time. So you've got income, right? Revenue, income, everybody has a goal for that and tracks that. In this case, that revenue is 2.5 million. And let me just explain the other pieces of your profit and loss statement. And then I'm going to come back and I'm going to address some individual line items. So you have direct expenses or cost of goods sold. So direct expenses or cost of goods sold are just the costs related to producing that revenue. So it should only include materials, labor, subcontracts, equipment, and other like usually permits or licenses, that kind of thing. But other than that, nothing should be in cost of goods sold other than those costs, again, directly related to producing that revenue. Liability insurance would also be in there, along with your labor, any related benefits, taxes that you have to pay to have that labor, right? Any of the burden associated with it. How you want to think about cost of goods sold is that you want to, this is sort of your acid test question. Is that cost directly related to producing that revenue? In other words, if I do more revenue, will that cost go up? If I produce less revenue, will that cost go down? That means it's a variable cost that's directly related to the revenue I produce. That's one way of knowing, is it a cost of goods sold? It's also a way of knowing if it doesn't belong in there and it belongs down here under overhead expenses. So this is the third key place in your profit and loss statement. So overhead expenses, or if you're in QuickBooks, it's just called expenses. These are the costs for running your business, right? So these are things like rent, office supplies, utilities, computers, cell phones, bank charges, that kind of stuff. But also in here are things like labor for overhead, right? So now I have overhead admin labor, non-job field time labor. That would be vacation and holidays for your field guys, bonuses, overhead payroll taxes, the taxes related to running for the payroll that's just overhead related. All the overhead related expenses for benefits, 401k, workers' comp, that's just related to overhead employees. So what's an overhead employee? An overhead employee is your estimator, your office manager. It could be your, dispatch person if you do service work. It could be your warehouse person if you have a warehouse, right? It could be, if you have a maintenance person, right? So there's different people who will be in your overhead that are not directly related to producing that revenue up above. And I will say that labor is the number one place where I see people allocate costs incorrectly. A lot of times what I see is that they have all of their payroll allocated either down here under overhead expenses or up here, all of it under cost of goods sold. Now, the problem with that is now what I have is I have my costs mixed up, right? Some of those costs really do belong under overhead. They're not a cost directly related to producing that revenue. Or if it's all down under overhead, I don't have an accurate way of being able to see how am I doing operationally in my business? Because remember, I said a little while ago, contractors live and die by gross profit margin. So when I look at this profit and loss statement, this percentage is really critical to you, this gross profit number here. And margin just by definition means a percentage, right? And percentages are what I call the great equalizer. They're the easiest way to be able to, no matter what the volume is going up or down, percentages sort of equalize that out. And it lets you be able to evaluate or assess the effectiveness of your operations or your business by doing it on a percentage basis, because your gross profit margin percentage should stay consistent, whether you're doing if you're in this case, and it's going to vary depending on the size of your company, right? Or the size of projects, if you change dramatically over one year over another. But if you stay pretty consistent with the size jobs that you do within a fairly good size range, your revenue might go up the next year, but your margin should stay consistent. So your gross profit margin is a way for you to be able to evaluate the success of the operations of your business in terms of your project profitability. And when you're looking at that, it's really critical that you're able to take this revenue number, 2.5 million, subtract the cost of producing that revenue, in this case, 1.7 million, to tell you you have a gross profit of 882,000 or 34%. Now, if I take all these labor numbers out here, right? If all those labor numbers are down there below under overhead, instead of up in cost of goods sold, it says I made an 82% gross profit margin, right? It's going to look amazing. And you're going to be wondering, well, wow, like when somebody talks about their gross profit margin, my numbers are incredible. They must be great, right? Well, no, you just don't have accurate, reliable feedback. Conversely, if all of this payroll down here, right? So we have a total expense for payroll down here. When I add together admin wages and non-billable field labor, that would be vacation, holidays, that kind of stuff. That's not a cost of goods sold. That is part of your overhead. Bonuses, payroll taxes, city tax, 401k, workers' comp. So if I add together all of those expenses, that total down here is around 252,000. So imagine if all of that's up under cost of goods sold. So what if I stick a number in here and I said 252,000? Well, now that just changed my gross profit margin to 24%. Well, if I have a goal at 34% for gross profit margin or 32%, and I look at this and I go, oh my gosh, like I'm doing really poorly. I have no accurate way of being able to see where I really stand in the operations of my business. So it's really important that you, when you are getting feedback on your profit and loss statement, that those dollars are in the right place, right? That your cost under cost of goods sold is just reflective of the cost to produce that revenue, directly related to producing that revenue, and that your cost for overhead is reflective of what's my real overhead like. What does it cost me to run my business? Because there's another element of that that's really critical in terms of how you mark up jobs and how you price jobs. If these numbers are not right, then your overhead, the amount that you have to mark up for overhead, you're not getting accurate information for that too. So your bottom line dollars are going to be the same. This net income won't change if it's under cost of goods sold, if it's misallocated in cost of goods sold or overhead. But what it will do is it won't let you manage that one critical number for you that is so important as a contractor, and that is your gross profit margin or your rate of return. That is a really key number for you to be able to manage year over year, month over month, to be able to know, am I on track with reaching my goals? And as a contractor, you want to have a goal for how much you want to make in terms of gross profit margin. Now, that's a deeper topic, and we don't have time to go into that today, but you do want to have a goal for how much you want to be making as that rate of return. Really important. And be able to then, like I say, get feedback that lets you see how am I doing compared to how I want to be doing. So having these numbers in the right place is really critical. So let's talk now about how do you do that? Because it's labor is really, some of the, let me take labor off the table just for a second. So some of these numbers are really obvious, right? If you have maintenance and repairs under there and it's not under cost of goods sold and it's not to a job, it doesn't belong there. It's an overhead expenses. If you can't allocate it, here's another rule of thumb. If it's not directly related to producing the revenue for that job, and if it can't be allocated to a specific job, then it's overhead. So I'm going to say that again. If it's not directly related to producing the revenue on that job, and if it cannot be specifically identified to a specific job, it's an overhead expense. And then when the second thing is, let's talk about labor. So how do you split out this labor? Because a lot of times it's you're either using a payroll service or maybe using QuickBooks payroll or the payroll through whatever your software is that you're using. There is a way and there's a system for being able to split out payroll between overhead and cost of goods sold. It usually takes maybe doing a journal entry to move it from one place to another. If you're using QuickBooks, one really easy way that I do this is I recommend that you set that all of the payroll, when you're posting it initially, does go to a cost of goods sold account, right? But then there's a job called overhead labor, and all those labor time and hours and payroll that's not directly related to a job goes to that overhead job. And then once a month gets journal entered and brought down to overhead expenses. If you're not sure what a journal entry is, ask your CPA. Your CPA can explain it and can help you set this system up, or probably knows somebody who can help help you get the system set up. Other software will actually let you identify what goes to cost of goods sold and what goes to overhead based on however the payroll is coded. Or if you're doing it with just a journal entry and it gets posted within your books every month, have whoever it is that's posting it have some way of being able to track what's job related and what's not. So you have to have a little bit of a tracking system in place to know what is and what isn't. But I'm just saying, when you have this information in a way that you can more accurately assess the success of your business, if you can more accurately get feedback on what is my gross profit margin or my rate of return on the work that I'm doing in my business, you will have greater clarity about what you need to focus on in order to have your business reach your personal goals and your profitability goals. It gives you that information to be able to then go back and look and go, okay, I can look at if that number's off, then I can go look at my jobs and I can say, okay, like what jobs, if that was, let's say if that my goal was 34%, but let's say that number said 28%, I'd go back and I'd look at my jobs and look at, okay, what jobs am I losing money on? Did I not bill something? Did I miss something? Did a cost get double posted? I mean, there's all kinds of reasons why your gross profit margin might be off. If you're doing work in progress schedules, is my work in progress off? There are a finite number of reasons why your gross profit margin is going to be off. It's either going to be that you had cost overruns, you had a change order that wasn't processed that you needed to charge to the client, a billing didn't happen, you have costs and cost of goods sold that have no related revenue to it, that doesn't belong in cost of goods sold, it belongs up under overhead, or you have cost overruns on a job, or you've exceeded, maybe you've come in under budget on a job. Those are the reasons why your gross profit margin are going to be off. Or if you've just posted a work in progress adjustment incorrectly, which is also a possibility. But again, those are the reasons why your gross profit margin is going to be off. So if your gross profit margin, that again, margin percentage, that rate of return, if it's a roller coaster every month and you're not able to get accurate feedback, ask yourself these questions, right? Ask yourself the question, do I not have costs allocated to the right place? That's the first question. Second question is, am I consistent in billing month in and month out? And overall, am I meeting my goals? If I'm not, what do I need to dig deeper into? Go look at your jobs, right? Are your jobs running over? Did billings get missed? Did a change order not get processed and billed? All of those things. So you maybe are starting to notice that what I'm saying here is you start to look at your profit and loss statement every month, and it provides this feedback to let you get clarity about like, where am I with my business? If the numbers look wonky, it starts you on a path to looking a couple of other places. That couple of other places are where dollars and cents get left on the table, right? I didn't bill a change order. I missed a billing with a client. This is really important to your business and ultimately to your profitability. So if you want to be able to have more control over your bottom line, get better feedback. And what I'm sharing with you today is one of the ways that you can start to get better feedback. Okay, so I hope you have found this to be helpful. There's a couple things I'm going to share with you. So if you are in QuickBooks, I'm going to share with you a website for Info Plus Accounting. Info Plus Accounting is owned by a woman by the name of Diane Gilson. She is the premier expert on QuickBooks construction accounting. She's got tons of videos and resources and trainings on how to get accurate job costing and financial data. So she's got a lot of really good tools on there that can help maybe your staff understand this stuff and help start to give you better feedback on your financials. So that link is below. By all means, feel free to go visit her website, check it out. Like I said, she's got lots of great resources, super helpful in helping you get more accurate and reliable information. So I hope you found this to be helpful today. I'd love to hear your thoughts. Leave a comment below, and I'll see you next time on The Profit Builder.